Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that pullback towards 2082 attracted responsive buyers yet again, and we got a pretty nice move back up towards the 96, 97 area. At this point, heading into the open, the buy side is in firm control, but at the same time, we are at this inflection point in the S&P as well as in the Russell. So the Russell is the market that's really been leading on the upside and is trading very close to its all-time high. So far in the overnight session, we've seen a pretty nice up move. Yesterday, Russell tested 1270 and the all-time high is 72. So it's very close to a major inflection point. And if we continue to see broad market strength in the market today and the Russell actually puts in a breakout above its all-time high, then that can result in a pretty strong upside move in the S&P as well, because so far ES has been playing catch up over the last few days, and the buyers have been more dominant and in control. So heading into the open, as long as we're not seeing any major signs of weakness, the buyers can still be active and the focus will still be on long setups. We have pre-market support at 89 quarter to 91 half. We have the previous close and previous VPOC right within that zone, and then we have the initial support zone at 84.75 to 86.75. Now, ideally, if the market is going to put in a breakout above the 96 half to 98 half zone, then we should hold above 84.75 to 86.75. The 80-82 bull bear zone is really the final spot, but if the market is truly strong and it's going to break out today, then we should hold above 84.75 to 86.75, and ideally even above 89 quarter to 91 half. But the markets are at a important inflection point here. Either we're going to see the broad market strength continue and then we get a breakout, or if we reject here and we start seeing some pretty strong selling coming into the Russell, then this market can still continue balancing in a wide range and turn right back around, because bigger picture, we are still trading within a pretty large trading range, and within that range the buyers have been more dominant so far, and they are certainly more in control heading into the open. But we are at this inflection point now. As long as we're not seeing any clear signs of weakness, the default scenario is going to be to expect a upside break for a test of at least 2104.75 to 06.75. We have a little bit of resistance at 2101 to 02 along the way, open gap and naked VPOC there, but a breakout above yesterday's high would likely take ES up to at least 2104.75 to 06.75, and if that coincides with the Russell making a new all-time high, then we don't even have to stop at 04.75 to 06.75, and ES can even go higher up to the 08 quarter gap, the 10 quarter, 12 quarter zone, and potentially the 14.75 to 16.75, although at that point you would really be exhausting the upside potential and the range on the day. So that's something that we have to take step by step and see just the level of momentum, the level of volume, and overall strength that we're seeing in the market to gauge whether there is enough in it to really take it all the way up there. But if we can put in a breakout above 96 half to 98 half, then the 04.75 to 06.75 would be a high odds target. Now on the flip side, if the Russell fails to go higher and ES can't take out 96 half to 98 half, then we can continue balancing in a range and we can put in a pullback, potentially even all the way back down towards 80, 82. But we are going to have to see some clear-cut signs showing a lack of upside strength and a lack of strength in the market internals to bring that scenario into play. Because at this point, we do need to see that broad market strength to really get that breakout going. And if we're not seeing that, if the AD is quite mediocre or negative and heading lower, if there's not really a whole lot of upside momentum on the NYC tick, then we'll have to be cautious on the upside scenario. But as long as we're not seeing any warning signs, and once the market opens, everything is pretty much supporting the upside, and tick is spending more time above zero, the advanced decline line is most likely going to open on a pretty strong level and is continuing to go higher, then we'll focus on long setups, be very cautious on shorts, even at 0475 to 0675, it's better served as a target if we get a breakout rather than a spot to short the market, because in order to really get up there, most likely Russell at that point will be close to its all-time high or even breaking out above it. And again, if TF puts in a strong breakout above 72, then we're going to have to be very careful on shorting the market, because it'll be indicating broad market strength, and the buyers will be in firm control at that point. So as long as we're not seeing any warning signs, we'll focus more on longs, but with the understanding that the market is at a key inflection point. So if we can't go higher, and if we don't see the broad market strength and the momentum's not there, and things start turning around, then we are still trading in a big balance, and from there we can still pull back just as easily. It's just that heading into the open so far, the buyers have been primarily very dominant, and for that reason we want to give more edge to the buy side, and overall we are still in a more bullish market. Now this news from Europe with the whole Greece exit, we've seen that has resulted in a lot of strong upside and downside moves over the last several days, and really even over the last several weeks. So that is something to watch out for. If you get a high momentum move on the downside or upside, just be careful fading that, because if it's news driven, then all bets are off. It can really go further than you might think. So that's just the risk point in the market to be aware of. But so far, as long as we continue holding above 89 quarter to 91.5, 84.75 to 86.75, the buy side would still remain in control, and we can simply balance and then eventually actually break out above 96.5 to 98.5. On the econ calendar, we have the Philly Fed survey out at 9 a.m. Central Time, and that's really the only scheduled catalyst on the day time frame today. So those were the main thoughts heading into the open. Again, the market is at a key inflection point, so either we get a breakout above the pre-market resistance, or we can reject. But by default, we are going to give more weight to the upside scenario. So let's see if the buyers can maintain control today and actually put a breakout for a test of 0475 to 0675. Let's see if that broad market strength is really present in the market, and we'll take it from there.